And we are live. And with that, I'm going to start sharing my screen and start off. Hello, I'm Thomas Hall, Executive Director of Clean Start, and you're joining us for another Clean Start perspective. We've got a great guest today where we're going to talk about the different stages of growing a company and what it takes to really nail your product and customer fit on things. From an experienced executive and mentor and advisor of over 30 years. Before we get to that, I want to recognize who we're supported by. Clean Start is supported by SMUD, Chico Start, Fresno State, Witten Law, Baker Tilly, and River City Bank. All of these groups come together to support entrepreneurs in the greater Central Valley. So if you're looking for support, reach out to us at Clean Start and we'll help you make an introduction. And with that, I would like to welcome our guest, Derek Porter. Derek Porter is an accomplished executive and consultant with over 30 years of experience in software, energy, and heavy industry. He's led companies through multiple exits, including a 1.2 billion transaction in 2024. He actually got his start in the area with Hinwood Energy, who Mark Hinwood is actually one of the founders of Clean Start. So we're excited to have him on here and kind of share his story. So I'm gonna start off my conversation with him. Welcome, Derek. Everyone, I guess round of applause. How you doing today?
I'm doing great. Thanks. Thanks for having me.
Well, one of the things you spoke at our deep dive class recently, and you kind of having been in the industry for so long, you've actually been at a whole bunch of different levels of companies, not just, all at one, executive or entry level. You've been at uh, entry stage, growing companies, and the CEO crash course. You kind of highlighted the different stages of a company. And I wanted to quickly kind of go through that with you so everyone can kind of understand, how you view, companies in their maturity. And so let me quickly share the screen here. So you have startup, toddler, teenager, prime time, mature. Um, You have some of the characteristics here, but as you kind of think about them, what are some of, I guess, the big things that stand out as differences between, a startup and a toddler? Everyone's kind of, I know in the startup area, they're like, are you, friends and family pre-seed, Series A? Um, where do you draw the line on a lot of these?
Yeah, you bet. Startup, I think people understand in some sense of the word because it's self-describing. You're starting up a company, you're doing everything and anything you can to get relevance in the marketplace, to get a product established, to get some sales going. You're selling, you're reassessing, you're getting financing, you're doing all the things to bootstrap your company into existence. And at some point you turn a corner, and that turn is when you start establishing a handful of customers, you're getting revenue in the door, you're starting to pay your own bills, and your vision and roadmap are resonating in the marketplace to where people are listening to you. You're getting some word of mouth from your client base that you've brought on board. You're still selling and doing and supporting and building. You might have brought on some employees, that are beyond the original adventures that came along with you. And you're starting to look like an ongoing entity. And, it might be toddler to kid because, you're getting around on your own, but you haven't made it yet.
Mhm.
And then, when you kind of transition to teenager, that's kind of like teenagers. You're starting to get recognized for who you are and what you do. And it might be a better to say teenager to young adult because this is where you go and really start to mature and go from being recognized to having responsibility in the marketplace, having responsibility for your customers, having responsibility for your set of employees, and for what you stand for in your mission in the market. And so that this you're starting to mature your business practices. You've got a solid leadership team. You're organized like a software company. You have a product management function that is is really overseeing how you invest in the product, how your customers are using it, where do you take it next, what's your next frontier, because that's one of the engines for growth. Along with sales and getting out into the marketplace, it's where do you take it next? You have formalized engineering, you have professional services that are executing on a set of principles and standard practices. And you're starting to have formalized support in finance and accounting and maybe HR. You're establishing business practices that are norms in the marketplace that you probably didn't have as a startup because you didn't need them. In fact, it'd be overkill. And
Yeah. So one thing I kind of heard in there, that you mentioned, and is, you're building this team, and your culture is kind of evolving, and you're kind of figuring it out as you go along. And you're trying to figure out, how do you serve your customer, deliver to them, and also how do you kind of build this team for kind of the long run. And one of the things that I think, impressed upon me, looking at your career is that you've had a lot of people that have liked working with you and have often come back to you, because of, I'm assuming, the culture and the team that you've kind of built around you. So starting at your early days at, when you, I guess, joined Hinwood Energy, how did you kind of go about figuring out this is the type of team that we want to build so that we can go for the long run?
you bet. So prior to joining Hinwood, the one secret is I was actually working at a utility doing the work and using the products that Hinwood as a software entity sold into the marketplace. So I came from the standpoint of the business user, if you will, and that gave me a little bit of a leg up because then I had a fairly fundamental understanding of what the customers were looking for, what was going to make them tick, what was their problems, where were their sore points, and so I was able to use that and channel it through the people that were around us. That we look for people that also had either some level of industry experience or had that scientific background that understood the types of business problems that our clients were facing. And that wasn't true all the way through. You start using people or start hiring people that have just good technical skills or good people skills, good sales skills. But in the beginning, we tended to hire people that also had some background or some propensity to understand the industry and understand the customers that were using our products and how they used them. And that helped us understand the customer and also understand and predict kind of where the next level of problem was or where the next level of usability was going to come from. And so that was one of the early secrets, if you will.
So one thing that I remember from, our earlier discussion was your kind of first introduction to Hinwood Energy and saying like, I'm a customer who would absolutely love this. Um, what was the kind of, I guess, your first kind of like, hey, I discovered this thing I want, and then I went and talked with Hinwood Energy, and what was kind of, I guess, your first interactions around working with them, um, before joining the company?
Yeah. So one of the things is that I was part of the utility holding company at the time, and the utility holding company had bought a small software firm called Entech. And we had a vision and we had, a decent product. We were fighting with Henwood actually at the time for number two and number three in the marketplace. We were taking market share away from the market leader because their eye wasn't on the ball. They had been acquired by EDS. EDS acquired that company to outsource IT functions and utilities. So it was a little bit of open game, if you will, to go after those customers that were looking for somebody that was really focused on their product and what they were doing rather than on their IT department. And when Mark Henwood and I met at a conference, we were able to, we were competing in the marketplace, so we had interest in each other. You want to know who your competitor is personally. And then we got talking just in general about, where we saw the industry going and kind of what our philosophy was. And the more we talked, the more we realized we had a very similar vision and where we thought the market was going and where products needed to go. And we had this idea to bring our two companies together. And at the time, it started out as Henwood acquiring Intech, and I was all for that. I went to our board and supported it because, quite frankly, the utility holding company was so early in their days of competing with one another. They were struggling with the fact that we were a software company helping other utilities to compete in the marketplace. And so it wasn't a good fit at that time for a utility holding company. And it was a good fit because Henwood and Entech had such similar visions of where to take things.
I
And
imagine you guys geeking out over the industry at this conference.
well, we were in partially because it was at a time where we both felt the industry was going to explode because they were just starting to deregulate. We had products, both foresaw it, and we were investing in trading products. And we
So,
had products that helped understand what the market prices were and what assets were valued at within those markets. And so we had those kind of similar views and similar take on that. These were going to explode in value rather than status quo. And so it was a good time to come together. And I credit Mark. He had a lot of good thoughts about how to integrate the two companies. And one of the key things was we had to get the product clarity fairly quickly and then get everybody onto one homogeneous set of products. And we were able to merge our product capabilities accordingly and put them all into one entity. And that's a mistake a lot of companies make when they start bringing companies together. There is a synergy oftentimes, but there can also be overlap and confusion. And if you don't make those hard decisions early on how you're going to handle that, and I've seen it in some of the other acquisitions we did where we did not take that hard decision early, and we caused a lot of confusion to customers and potential customers.
I'll stick a pin in that one because we'll have to come back to it. I'll learn later. But so if we take people back to 1996 and how energy pricing and trading worked versus today, um, you're really going, the utility is not known for being a super forward-looking industry or a industry that's quick to adapt on many things. And if you go back to 96, you're talking about, I imagine energy trading looking much different where you don't have a lot of clarity in prices. You probably don't have a whole lot of communication besides contracts that have been worked out over years. And you guys are introducing something that's really novel and beneficial to the industry. It's this great product that you guys spent, time geeking out on. Um, how did you make it? How did you make the utilities that are slow and I don't want to say that they hate new technologies, but they're risk adverse.
Well,
How did you make them connect with what you're doing?
so what was happening is, first of all, the gas market deregulated years earlier, and
Hmm.
gas is much closer to the definition of a commodity. And so the commodity traders came in and really created an example for gas as a new commodity, if you will, moving from just an energy source to a traded commodity and all the financial instruments that go around that. So when electricity came along, they tried applying the same model as they did to gas. So we were reacting to what was happening in the marketplace, not creating it at the time.
Hmm.
And so what we said is, all right, we understand the difference between gas and electricity in that you can't store electricity. You trade it, it's got to be used, or yeah, you can trade off futures, but really that's a different kind of commodity. Even natural gas, you can store an element of it. So, um, and at the time, electricity did not have sufficient storage to have it accountable for anything. So,
Wasn't enough pumped hydro?
scheduling transactions, scheduling when the energy is going to be delivered, accounting for that. There was a whole bunch of challenges around that. And then how to handle standard products and how to uh, quickly enter that data into because you're trading fairly quickly now. Yeah, it's not the long drawn out contracts. It's a phone call and then you enter it into your system and now you're delivering. And so we were able to get some early adopters that were market leaders and quite frankly, we could have stayed on top and been the number one energy. We started out as number one energy trading software. We could have stayed there, but at the time we were not ready to go get outside money and grow on somebody else's dime. We were growing on our own dime, and we couldn't grow fast enough to keep up with demand. So we fell behind and ended up not number one in the marketplace. So that was a lesson learned about when you have, the cliche of, if a dog catches the car, what's he going to do with it? Well, we caught the car and we didn't quite know what to do with it, and we probably should have gotten outside investment.
Yeah. Were there any like signals that you saw that you feel like you should have listened to back then that you'd given advice to, someone who's might be doing a business now that I said like, I saw that and I thought it meant I should take outside investment, but I didn't. Um, what are some things that you look back and you're like, hey, here was a big signal that I missed and you'd give that advice to an entrepreneur today?
Well, one of the things are is you know you're at a big milestone in the business and a big pivot point in your business because you're all of a sudden, we were going from doing average contracts of 100,000 to average contracts of 500,000 because now we were doing much larger scale systems. We needed some level of customization and we were trying to keep up and we were getting customers to invest in us keeping up with what the demands were in the marketplace. So that those are all good signs. And what we probably should have done is gone and got some outside advice on,
Mhm.
hey, we're at this turning point in our industry and in our market niche. What are the options? I don't think we really had even stopped to think, should we go get outside investment? We just weren't there in our thinking at the time. We were just
Mhm.
so busy keeping up with what we caught that we were behind in hiring, we were behind in thinking about, what are the next steps and literally just delivering. And that would have been a good time to take a breath and go say, hey, what have other companies done when they've got into a point like this? And we would have probably learned, hey, options are we got it out. Options are we double down and put our own money in to go this next step of growth, or we go out and get some outside help in some way, shape, or form. And that's a lesson learned that
You're working
as
really
a
hard trying to
as
figure
an
out where to go
entrepreneur,
on
and
it.
Mark was very good about being fiscally responsible and making sure that we were profitable every month, and I I allowed him for that because we had responsibility to all of our employees, make sure they were stable.
Sounds like a good team. Now, you guys did really well, and you did kind of, I guess, get outside money when Hinwood Energy was acquired by Global Energy Decisions, right?
That's right. We had gotten to a point of growth, and the company was getting big enough that Mark's management style was kind of maxing out in terms of number of employees in our company. Yeah, he was a very hands-on person and very involved with what was going on in the business. And we had gotten to multiple product lines, over 150 people strong. And so he decided that, at that time we said, hey, let's go see, we're hot commodity in the marketplace. Maybe it's a good time to sell. And quite frankly, we went out to do that. And uh, we were approached by a firm that were going to invest in us, and we were going to remain as the management team, and they were going to be a secondary investor. And we got to the 11th hour of due diligence, and they backed out. And the reason they backed out is we hadn't quite turned the corner from being a startup kind of consulting model where we had principals and they were driving business lines and transferred to kind of modeling ourselves as a software company like you would see in Silicon Valley. And this investor was from Silicon Valley, so that was their model. That was their experts that they brought in to do due diligence. And not that we weren't doing all the same things, we just didn't think about it that way and have their nomenclature of how we went about doing business. And Mark, being the clever guy that he is, when they backed out at the 11th hour, the next day he was traveling down to their office and say, "Hey, why'd you guys back out?" And took copious notes. And that was on a Friday. On Monday, he came in and we reorganized to be a software company. We put in the practices and procedures that we were missing. We adopted nomenclature from Silicon Valley about how we managed our products, and we regrouped, and a year later went back to market, and that's when Global Energy purchased us. And Global Energy was purchasing us kind of as a foundation company.
I want to kind of highlight like what you just said about Mark there, and like if you're watching this and you're figuring out, and you're going out there and trying to get money, and it's very much the way VCs operate now is, they're willing to give you feedback on why they didn't, because they probably looked at you and said, like, maybe if they change these things, we can invest in them in a few years. Um, and that's really important, being able to take that advice, from you guys geeking out at the beginning over, your shared interest in how these energy markets are going to develop to, talking to VC after they say no. And you mentioned, you getting purchased by Global Energy decisions. And the other day I was talking with someone from Cal ISO, and they're talking about markets and, um, trading things across things. And it came across the conversation that they did not know exactly how exciting the early 2000s were in the energy market. They were unaware of really what Enron did to the energy market. And I think, Enron probably played a big role in the next few years of at least your work, even if you weren't directly involved with it. And you guys are getting acquired or merged at the same time. So can you share your experience around that and the impact on trying to grow an innovative product while you have, like, I imagine it's like in the clean energy space where we just had Nikola Tesla roll something down a hill and raise a bunch of money, and then later they go to jail because, or they lied about their truck, and everyone's now like, you can't invest in clean energy. So that's kind of the parallel I make. But can you share your kind of story from about then?
You bet. So there, 2001 is when we sold Henwood. Um, but at that same year, 9/11 happened, which really shocked the world. Um, and Enron happened. And those two events caused the utility industry being fairly conservative, and Enron, kind of blowing up the model of what they had adopted as energy trading, and especially blowing up California because of what they did with the
Yeah.
ISO at the time and gaming the system. And so everybody kind of lost confidence in this whole energy trading and aggressive approach and really got conservative, which meant if you're in the energy trading space, you weren't selling anything to anybody. Luckily, at Global Energy, we were our Henwood, and now we're Global Energy. We had a diversified enough product line. We only lost 15% of our business. But of course, when you're getting bought by venture capital and you've been growing at 30% per year for 5 years in a row, and they bought on that business model continuing forward based on, your projections and outlook, well, those were all suns taking into effect the impact of those two major events. And the reality of those two major events is they really, you know, took us out at the knees, if you will, in terms of growth, and we were minus 15%. And of course, that made head rolls. I got demoted for a bit of time until they started doing research when they were trying to buy the next company to put in the portfolio with Global Energy, and they realized most of the companies they were looking at had lost 75%, 100%. 50%. 15% all of a sudden looked like, hey, we didn't do so bad given what the rest of the market did. But that took a while for that to permeate and people to realize that actually we didn't do so bad.
Probably a lot of sleepless nights between those 2 points.
There were a lot of worry points, and Mark and the management team having carried forward into global energy, we felt the weight of the responsibility to carry forward on the promise, if you will, and we weren't able to do that to the extent that we had promised, and at least not that first year. We actually recovered in the second year, but that first year was pretty rough.
So you guys have you're able to recover, expand, and then um, it moved into another company, right? As it grew.
Yeah, so global energy did make some additional acquisitions, and the sum of the parts was, the whole was getting greater than the sum of the parts, if you will, and that
Mhm.
made us more relevant. We got back on that 30% per year growth for the next 4 years. And then ABB came along. 4 to 7 years is kind of the life cycle of a holding of private equity or venture capital. And
Mhm.
and we're in that fourth to fifth year, and they stuck their head up and said, this might be a good time to, we've got a good track record of sales. Our numbers are pretty good. And Ventex and a number of other companies came along and were interested, and we ended up selling to Ventex. And we went from what I would call kind of that young adult stage at Global Energy into Ventex, which is a combination of some very mature companies. And probably we would have been acquired by Vista Equity at the time as a standalone entity. But to get the bid right, they needed to have some of the cash coming from the mature companies that were already part of Ventex. So they tucked us under there, and then it was, up to the management and leadership team to say, how do we make this work? And we did make it work, not as well as we may have been on our own, but we did make it work, and actually helped kind of revitalize what was already in Ventex with some of the approaches that we had been taking as global energy, and really make Ventex very relevant. And ultimately, Ventex got purchased then by ABB, which was a strategic buyer.
That's the big ABB, right?
It's big ABB.
Yeah. So at this point, how many utilities, or I guess utility scale companies, have you sold to? I guess by late 2000s.
Um, you mean in terms
How
of,
many cut people used your product?
oh, how many customers did we
Yeah.
have? We had hundreds of customers now worldwide. We
And
were
these customers, they were utilities. Were they what were the customers?
Customers were mostly utilities. They were energy companies. They were energy, not only the utilities, but also as in a deregulated market, there were a lot of people doing projects. They were
Mhm.
building power plants as on spec, if you will, and selling into the market as a entrepreneurial gain. There were other energy companies, gas and oil, that were using our products because they knew that they were selling into the energy industry, into the electric marketplace. So we were relevant kind of across the energy stream. Uh,
So, when it came to at least communicating with customers and convincing them, that this is a product that works for them, this entire time you've been focusing kind of on the product and the product leadership of it. Um, how did you kind of, I guess, make the jump from this is something cool that the industry could use to the industry being like, I know part of it's through deregulation, but where they're like, this is something that we want to move from a cool testing idea to we need to use this everywhere.
Yeah, so there's kind of a couple major facets to that. One is, having a relevant product that solves a particular business problem, and we had done that pretty well at Global Energy, and we had started to realize that, hey, there's not just one department that interacts with these decisions that we're supporting and the data that we're collecting. And so we started to expand it at the global energy level to go from point solution to more work group solution, where a number of different people were interacting with the product in their way that they're going to do business. They were doing different aspects of the decision making. One, you weren't just planning what new transmission and what new generation you're going to put in line. You weren't just figuring out what the energy transaction prices are going to be. Now you're, okay, I can use this to help me with my fuel strategy and my fuel buying. I can use this to help me decide what of my assets I want to keep and which I want to take to market. We were getting involved in bigger and more robust decisions across the line. So that was kind of step one
I
is
really want to peel that back because, we talk with all these entrepreneurs that, they go and they talk with utilities, and we have, a really supportive utility here in SMUD. But in the utilities, there's all these different groups. And sometimes there's a group that's interested, but they never have a check. They don't have a checkbook to pay you with. And then you have ones that have a checkbook, but their focus may be on strictly on their financials, but not what all these other groups do. And it sounds like you were able to go from having like one group, one group or one customer to multiple customers in the company. And if you think of it like a family, there's, you have your influencers, you have your selectors, the people with the checkbooks, the final decision makers. It sounded like what your customer looked like, and it started looking a lot more complicated. How did you manage that and also make sure that you, I guess, kept appeasing the decision maker and the person with a checkbook? Um, Feels like there's a
well,
lot of customers to chase in there.
there were a lot of customers there. What you gotta, what you start to realize, and again, having a little bit of industry background is, there's not that many points where the real checks get signed. There's a lot of
Mm,
people who influence decisions, but there's not that many people who actually say, yeah, I can spend the money in
mm.
that environment. A little different in the oil and gas environment. It's a much shallower well from going from front line to money. Utility is pretty deep to get to where really the money gets spent. But so we learn to sell to the C-suite. We learn to articulate the value we can bring to the business, not just the ease of use or not just the highlights of what the product did, but what the product did for what the business wanted to do. And that was a big swing in the way we thought about how to interact with customers. And that was a big part of going from point solution selling to solution selling. And then as we became part of Ventex, which was already an enterprise provider of software, it's how do we fit all these products together to be a total enterprise solution vendor for the energy industry. And we were able to craft that story and really leverage that story. Um, Probably better from a marketing sense than an actual technology sense, but at least each of the sectors with where we did have product connected together uh, was pretty streamlined and very useful. But we became a fairly large, and a lot of utilities didn't realize how large a vendor we were to them until you get your account managers in and sit down with them and say, hey, do you know you're doing $1 million worth of business with us every year?
And so you're now becoming this or whole is greater than the sum of the parts. Working with your investors, um, getting some big, deals in there. And how are you managing your team growth at this point?
So now what you're there's two steps in this. First step is really as you're growing into that, becoming a solution provider, you're hiring different types of salespeople because you're hiring people that have that enterprise um, uh, selling experience. The industry knowledge now is not as important as the knowledge of how to sell an enterprise software solution because it's a very different than selling a point solution or selling hardware. And so we're looking for different types. Just it's also how you organize the company, how you manage the company, in terms of delivery of professional services, delivery of the product, maintaining the product, and it's key to have one product that goes to everybody. Um, so there's a lot of transition technology wise and kind of procedure and practice and go to market wise
So you
in that transition.
so you were focusing a lot on the product and the strategy at this point, and it sounds like you had a lot of success also keeping on, preventing, a creep and keeping everyone's focus on, the bottom line of being profitable as well, delivering value to the customer and being able to turn that value into revenue that is, at the end of the day, profitable. Um, how did you kind of make sure that the teams that were and people that were working with you on the product and on the strategy kept that in mind when they were developing and growing?
So um, that's a challenge because people, you get when you're customer focused and you have success with your customers, that's what you want, and that's how you
Hmm.
build your company. You do get to a point now where you've grown a group of people that understood that's how we got successful. But then you have to now be a little bit more cautious because you're not just going to solve the customer's problem, you're going to solve your own problem too, and that's being profitable. And not everything the customer asks for is going to lead to that. So you have to kind of have this next level of discipline of, okay, we're going to solve the customer's biggest problems, but we're not going to solve all the problems. We're going to have to pick and choose our battles so that we also solve our challenge of being a profitable entity. And and it was a big transition. Global energy is all about growth. When we became part of Ventex, it was still about growth in some areas, but in other areas, we had some very mature product lines that had come along with the acquisitions that Ventex had made. And now you're going through and you're doing strategic assessments of your product lines and deciding where to pull back the investment and, go into harvest mode, and which is hard for people who have worked on a product to see their product go into harvest mode because they have emotional connection to it, and that's what helped it grow in the first place, right? So now you're going through this transition of where you're taking somebody's sacred babies and taking away a lot of the funding and using it to be profitable, but not necessarily think that that's where your next area of growth is because it's not fitting with the other pieces or because that's not where the utilities are investing. That's not where their hot buttons are. Yes, the people you're working with, it's their hot button because that's their job, but to those money people that are actually
Hmm.
writing the checks, that's not what their hot button is. That's not what's in their annual report that they're
Yeah,
doing about.
I think I want to kind of stay with that for a bit because, like, you talked about changing your business model um, for Hinwood Energy to get acquired and understand kind of the software business model that a lot of these VCs wanted to invest in, and then you matured, and ABB Software eventually wrapped into, I guess, GE Digital, which is a much larger company. But in your presentation to us earlier, one thing that you highlighted twice is, this business model that you guys adopted, that large industrials do not understand the software business model. Now, this is back, 2010 to 2015. Um, Talk about your kind of stressful struggles of making them understand and how hard it was, considering, you mentioned it multiple times at multiple steps of your journey in the last presentation.
Yeah, so there's two different examples I can give, if you will. One was ABB, and they bought Ventex as a strategic investment to move from being um, not just a large industrial hardware supplier to the energy industry, but to also have a software play. And they did that because Joe Hogan, who had been at GE, coincidentally, we'll get back to that in a minute, the GE story in a minute. This is unrelated to my story with GE, but in GE Healthcare had really seen the benefit of having software and operational technology come together. and it brought a lot of value to the customers. And so Hogan's view for ABB as a company is to bring software and operational technology together. And Ventex fit that because we were in the operating activities, we were doing the unit commitment dispatch. They were doing the energy management systems, and those two things fit together well. We did outage management, and if they're doing the network management, those two things fit together well. And then just our enterprise presence around asset management and around field crew management. They were all people who, worked on and worked around the types of products that ABB had sold. So, as a strategy, it made tons of sense. And what ABB wasn't ready for is a couple of things. One is to realize the dream of that, bringing it together. An investment was going to need to be made to make the integrations work and to take those to market. And two is, there was an investment needed just to bolster up. Vista had, remember I said we took and put some products into harvest mode, and we were lowering investment in some of the areas. Well, that caused some, technical deficiency that needed to be caught up. And ABB wasn't really in a position to be willing to do that. And what the biggest challenge is, quite frankly, is Joe Hogan left the company, and he had that vision, and he was pushing that vision, and it was a great vision because he had already made it successful at GE Healthcare. And the next person that came from a unit of the company that was project by project. It was a construction and controls area that were building projects on. Each project was its own profit center, if you will. And so when he comes in as CEO and looks at the software division, and we weren't carrying the profitability that we said we'd cover, well, he's going to start cutting and not putting money into that strategy of integrating the software. And that led to some customer dissatisfaction, if you will. It led me to exit and go to work for GE, who had adopted, quite interestingly, the same strategy that Hogan had taken to ABB. Is they said, hey, to be profitable into the future, our margins on hardware are going down. The relevance of the IT OT does make sense, and we want to be the leaders in that. In fact, we want to build a platform that everybody else uses to do that, which created GE Digital and Plexos. I mean, not Plexos, in their foundation for doing that. And it ends up that their idea was right on, and they're doing well with it today. But the platform idea, they weren't a platform provider. That those are people like Apple and Microsoft are the platform providers, and GE as an industrial, that was too big of a leap to go there. Even though the idea was good, it just wasn't the right mix. But getting the enterprise software around things like asset management, asset performance management, and manufacturing management and power management, those are all right up their alley. And as the GE was a great marketing company, and they were a great industrial company. If they marketed and they were successful in their marketing, they could build new factories and pour out more widgets. But they didn't understand that software doesn't work like that. Software is a long game, and you got to invest. You got to get those original customers. You got to get the word of mouth going, and then you get additional customers, and you build up your annual recurring revenue. And the annual recurring revenue is what the secret's all about. It's not top line revenue in 3 years. It's annual recurring revenue over time. And they advertised to the market that they were going to get to $5 billion in top line revenue in 4 years, and they were not on that track. And it was the wrong bet to make. If they would have said, hey, we're going to get to annual recurring revenue faster than anyone else, and they did. They got to um, um, the 100 million of annual recurring revenue in 3 years. It took 5 years for Salesforce.com to do that, and they were the fastest previous company to do that. They would have taken that to the marketplace, they would have been applauded rather than taking the 5 billion in 4 years of top line revenue, which they put all the software together that had been in GE to help get to a big number, but it wasn't that big, and we couldn't build new product fast enough to make that transition because software is a long game. It takes years.
Yeah. Well, we've had a long conversation with you here today, and there's no way that we can kind of cover all, I guess, the advice that you would give to people. But the way that I'd kind of sum it up, Alex, from the lessons learned that I've seen with you, one of them is, um, managing the integrations is something that helps, with success. So, kind of quality management. And I'd say like the not sexy things, but making sure everything works together. The other one that I've seen on there that unfortunately we didn't talk a whole much about that you mentioned several times is, know your metrics. ARR. Last night we were talking with startups around like how do you figure out what your ARR is or forecast it so that you can, communicate the right things to the market or, communicate with the market, your investors, and your kind of sources of capital. Um, so kind of those three things, you're a product
And
guy, but you're very focused on like the operations, successful operations, communicating with, your sources of capital, and then making sure that you're staying on track for success um, through your metrics. Now, before we kind of close up, you had some great success or Energy Exemplar, your advisor over there, and they had some really good success. What were some things, I guess key things that you felt like you were able to bring or advise Energy Exemplar on that you had learned from the past that you're like, hey, I want all these companies to really understand this so they can be, successful like Energy Exemplar, who sold to Vista Equity and Blackstone for over 1.2 billion in 2024.
yeah, there's what I brought to them was really a culmination of my learning in what the right product strategy should be and what the right product execution needed to be, and what the right software technology model needed to be. And that was around being a SaaS offering, software as a service offering, focusing on the annual recurring revenue, not the perpetual license model, uh, being able to have kind of an end-to-end solution, and then leveraging the data that you're collecting in order to provide the total set of insights, and not just the analytics and planning side of it, but get into the more operational side of it. But one of the things that we did that also helped lead to a very successful uh, understanding of where the company was and how those things were impacting it gets back to what you said about the metrics. And Riverside, as a mid-market private equity firm, they were very much understanding that the next buyer was likely going to be another equity investor. And so what they did is the metrics that they wanted us to run the company by was very much the metrics by which private investors are going to look at a company to make an investment in. And this is get back to your metrics standpoint. Any company, when they're turning that point from, hey, I'm building this company, to maybe the next thing I sell is the company, not the product, they need to go look at whoever is investing in their industry. What are their metrics? What are their investment metrics? And like the rule of 40 for Energy Exemplar was our our kind of golden rule, if you will. And the rule of 40 was your top line growth plus what your EBITDA is needs to be above 40. So, hey, if you're growing at 35%, but your EBITDA is only 5%, well, that's got to transition to a better balance, but at least you're meeting 40. And ideally you're getting your top line growth to 20 and your EBITDA to 20, that's great. And once you start exceeding the rule of 40, then you feel pretty confident taking it to market.
Well, I feel like we could have probably gone on for, hours more, condensing 30 years or, of industry experience in this into um, about 40 minutes is, not doing it a service, but, I found it really fascinating. I hope other people out there did too, because there's a lot of, history does kind of repeat itself. So, you might think that the way the energy market works today is way different than it was back in the day, but at the same time, there's probably a lot of similarities, especially if you think about where the energy market's going to be, you know, 30 years from now.
Well,
So,
in a lot of these lessons, they're object lessons, and hopefully people can learn from conversations like this where they don't need to have it as an object lesson. It could be learned in other ways, and it transcends the energy industry and it transcends software. It's all about understanding how to build a business and how to get it ready to take to market and not only execute for your customers, but execute for your potential investors as well.
you know what? I think that is a great note to end this on because that I think really summed everything up. So with that, I want to thank you for joining us and I appreciate all the support that you've given us talking to entrepreneurs and joining us here today, Derek. I look forward to whoever you support next and let me know because, always looking for good investment opportunities. Um, and I want to thank our supporters, SMUD, Chico Start, Fresno State, Winton Law, Baker Tilly, and River City Bank. And if you want to join more of these in the future, we've got a really good one coming up. Everyone's using AI, but you have to keep your voice. Everyone's going to know if the voice is AI. So how do you use AI to create better and faster content for your company so that you can market out there and reach customers? Additionally, we have our CEO crash course coming up this fall, and we have an info session on the 14th. Come and join us for that. Thank you very much for attending. Connect with us, connect with our sponsors, and go check out the next thing that Derek's going to work on. All right. Thank you very much, everybody. Bye.
Thanks.
Thanks.